Hey everyone, Amazon reported their latest quarterly earnings results, which I will review in this video here. I'll also update my buy recommendation for Amazon stock. Remember, coming into this quarter, I had Amazon rated as a buy. I had it as one of my top 25 stocks to buy right now, and I'll update that recommendation. I'll let you know if I'm keeping it up there as a top stock to buy. So let's take a look at these numbers. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so Amazon reported a 13% increase in sales up to $143.3 billion in the first quarter compared to $127.4 billion in the first quarter of 2023. This is on the higher end of what management told investors to expect in the upcoming quarter. Amazon updating and beating its own expectations here. One of the brighter spots in the quarter was the AWS segment sales increase of 17% year over year to $25 billion. I was paying close attention to this segment because growth in this segment had decelerated for several straight quarters, and then it stopped at 12% growth. And then it had 2 in a row quarters of 12% growth, and then it went up to 13%, and I was looking for an acceleration from there, and Amazon delivered on that, increasing to 17% growth in the quarter, up to $25 billion. Now you might say, why am I paying so much attention to the AWS segment out of its 3 overall segments? Well, if you look at its overall operating income, it came in at $15.3 billion in the first quarter, which more than tripled from $4.8 billion in the first quarter of 2023. I'll talk more about this in a little bit. But if you look at AWS specifically, $9.4 billion out of the company's $15.3 billion in operating income came from the AWS segment. The AWS segment is by far the most profitable segment for Amazon overall. It generates profit margins around 30%, whereas the rest of the business is nowhere near those margins. So that's why I pay so much attention to AWS when Amazon reports quarterly earnings results. Now, overall operating profitability is soaring, more than tripling year over year. That's impressive. Amazon making improvements to the business model that enhances both the customer experience and profitability. A win-win solution. I've been saying this for several quarters. That's really great news for Amazon stock investors. It wasn't all great news for Amazon. Its first quarter 2024 net income includes a pre-tax valuation loss of $2 billion included in non-operating expense from its investment in Rivian Automotive. You probably heard several years ago that Amazon was a big investor in Rivian. It ordered 100,000 of its electric delivery vans, and it also invested in Rivian stock. In the current quarter, Amazon taking a $2 billion loss in that investment. So I know many of you watching have taken big losses in Rivian stock. Well, maybe it makes you feel a little bit better knowing that Amazon took a $2 billion loss in Rivian stock. I'll just remind you, I've never had Rivian stock rated as a buy. Ever since I started following Rivian stock a couple of years ago, I've been telling investors I felt the stock is overvalued according to its prospects, and I've said that throughout 2024 as well. Just a reminder, I still don't feel like Rivian stock is a buy, but that's a story for another video. Moving on, operating cash flow for Amazon increased by 82% to $99 billion in the trailing 12 months, compared with $54 billion in the same trailing 12-month period, which ended March 31st. So not only is operating income growing, but operating cash flow is growing. $99 billion in cash this business generated in the last 12 months. That's a surge in cash flow business. And the big difference between operating income and cash flow are non-cash expenses like depreciation and stock-based compensation that Amazon has a significant portion of its expenses are non-cash. And so it gets to operate with larger cash flows like what happened in the latest trailing 12-month period. So the CEO saying that AWS's AI capabilities is what is re-accelerating the growth rate. The business is now at a $100 billion annual revenue run rate. That's phenomenal. The stores business continues to expand selection, provide everyday low prices, and accelerate delivery speed, setting another record for speed for Prime members in the first quarter, while also lowering their cost to serve. And their advertising efforts continue to benefit from the growth of our stores and Prime Video businesses. So let me break these down into bite-sized pieces here, starting with the delivery speeds. One of the big improvements management's made in the last several quarters is readjusting its warehouse and logistics footprint to get closer to customers. By now, Amazon has collected so much data on the customers and their purchasing patterns that it can optimize its logistics to be closer to customers. And that's a twofold benefit. On the one hand, it lowers Amazon's costs because it's closer to customers. And so the distance that these packages need to travel from purchase to delivery are shorter. And so that's a benefit, that's a lower cost for Amazon. On the other side of the equation, customers love it because now they get their items sooner. So it's a win-win solution here that I've been talking about that Amazon has found, and it continues to push this area to find more and more ways it can optimize this opportunity, because it's not often you can find an area where you can improve the value to the customer while at the same time lowering the cost to your business. That's been excellent. The other area that's talked about here is advertising. I've noted that Amazon's advertising business is growing by over 20% year over year in several consecutive quarters, and that's only going to improve now because it's including advertising in the Prime Video service. It is either telling customers you got to pay more for Prime Video or you got to accept advertising. It's, in other words, a price increase, just like many other streaming services. By the way, that's why I really like the streaming service segment, because price increases are happening across the board. Peacock recently said it's going to raise price as well. Netflix has raised price several times. Disney Plus is raising price. Hulu is raising price. Everybody is raising prices. That's great news for the industry overall. It's the opposite of what's happening with electric vehicles, where everybody is cutting price. And I want to stay away from industries where there's price competition, and I want to be attracted to industries that are all friendly and raising prices and saying, let's all raise prices, let's all make more profits, and customers will have to pay higher prices because anywhere they look, everyone's increasing price, so they can't switch because everyone is raising price. Those are the type of industries I like to invest in, and Amazon's Prime Video business is one segment of Amazon's business overall that's benefiting from that trend. Looking forward, Amazon is forecasting net sales between $144 billion and $149 billion for the next quarter. That would be revenue growth of 9% at the midpoint, which would be a slowdown, a deceleration from the 13% in the current quarter. Investors not too thrilled about that. I was hoping to see continued double-digit growth for Amazon in the next quarter, but it's understandable at this scale for Amazon to deliver that much growth is unrealistic to expect longer term. I suspect some quarters to be in the higher double digits. What's more important is where the growth is coming from. If the growth is going to be larger from the AWS segment, I would still be very happy as an investor, as was the case last quarter where AWS increased by 17% compared to 13% overall growth for the business. Operating income forecasted at $12 billion at the midpoint compared to $7.7 billion in the second quarter last year. Again, solid growth in operating income, but again, a deceleration from the more than tripling in the existing quarter. Again, that's unsustainable. Amazon is not expected to triple operating income each and every quarter. It's solid that it's increasing operating income by as much as it's doing. So Amazon stock price, as you'll see, if you recall, if you watched my video on if you should buy Amazon stock before or after earnings, I highlighted that I have Amazon stock rated as a buy. I've had it rated as a buy all year. I've had it rated as a top stock to buy all year. But I also mentioned to be aware that around the earnings, the stock price is very volatile, more volatile than usual. And you could see that here. Look at these violent swings in stock price from $173 per share to $185 per share down to $179. So the stock price is more volatile than usual. If you're a risk-averse investor, I noted it might be better to buy after the earnings, even though I had Amazon stock rated as a buy going in. Now, to update my recommendation on Amazon stock, you can see I have it a top 10 growth stock and a top 25 stock in the top 10 growth stock. I'm keeping it there today. After these earnings, I like what I saw from Amazon. It keeps its spot on my list of top stocks to buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.